Hey, TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. I'm also on Facebook Live at facebook.com/Dallas Trading Floor. Also on YouTube at youtube.com/Dallas Trading Floor. I'm on Twitch at twitch.tv-Dallas Trading Floor and Periscope, pscp.tv/Dallas Trading Floor. And of course, on Twitter and on TikTok. TikTok is at JKMALONE. So we are seeing a market sell-off today. This is what they commonly call a distribution day. I don't know if this is going to have a change in direction in the market. You can't tell. We've had basically 7 up days in a row, so I think the market's taking a bit of a breather. Now, of course, a lot of people are going to say that, this is going to change the trend, but I'm not so sure this is going to change the trend. And here's why. I'd like to kind of show you some of these charts. So let's get into it. The first chart is the market direction. Even though we are down today, and we definitely are down today, no question, the NASDAQ is still at 99.31. Now, it did move briefly above 10,000, and it's backed off a little bit. Most of the damage seems to be in the Dow Jones. So the reason for this is simple. The Dow Jones is only 30 stocks. It's the Dow Jones 30, and most of these are industrial. And a lot of these, unfortunately, are very leveraged, and they're very vulnerable. They're not growing as fast as some of the stocks that are in the NASDAQ 100, which is represented by the ETF, the QQQ. So we're seeing basically people taking some profits that got into some of the industrials and then probably are selling off today. We'll see. By the end of the week, it'll tell the story. But right now, we are in we're still in a confirmed uptrend. So it's not time to be short in the market right now. Why? Because you don't want to fight against the tape. That's the main thing. You don't want to fight against the tape. And that is why I currently am long in all of my positions, at least for right now. Now, if that changes, then I will go to cash and or move to start actively shorting the market. But right now, we don't want to be short the market because it is in a confirmed uptrend. Now, take a look at the spider here. And these are the key levels that I kind of want to show you on the spider. As you can see, it's come back from the May 23rd low where the spider briefly, and this is back in March 23rd, briefly touched the 218 level. As you can see, we seem to be settling back down to the 50-day moving average here. That's the red line on the chart that you're seeing. And by the way, if you're on TikTok, you can take a look at all the charts. I'm simulcasting this right now on Periscope. And the address on Periscope, so you can see it live right now, is pscp.tv/Dallas Trading Floor. So it looks as if the action on the spider is down a little bit today, but it's still above 300. That seems to be a key level. And it's been moving between, about 300 and about 310. But it has definitely backed off a lot today. So still not necessarily a change in the direction, though there is a sell-off. Now, there is also, as you can see it by this slide, the QQQ is trading currently at 243.65. There is a little bit of a back off, but it doesn't really break this upward trend. I am not really worried as much about the QQQ because they typically are the big cap techs, and they've been pulling the market along. In the last few times that we've had downturns in the last few days, well, before 7 days ago, basically 8 days ago, it was the big cap techs that kind of took up the slack. They're not taking up as much of the slack today because I believe a lot of people are taking profits in those right now. So, but it's off a little bit. It's off $5.19, or about down to about 2%. So the overall market is down much more, but the QQQ, which represents the NASDAQ 100, that's not quite down as much. So I still don't see a change in direction. And I just wanted to go over the sector spiders. everything is down across the board on all the sectors. Utilities are down, customer staples are down, consumer discretionary, information technology, communication services, etc. Now, why do I show you this one? Well, the reason I'm showing you this is because I believe this is a broad sell-off, which would indicate a distribution day. A distribution day basically is when people take profits in the stocks that have run up, and it is not necessarily a change in the direction. Now, the market may change direction, but for at least for right now, it's not, and we're currently in a confirmed uptrend. So let me just take a quick look over here. Do have somebody, and all right, great. Hey Arnold, how you doing? KBH, your honest thoughts, much appreciated. Okay, well, I'm going to take a look here at KBH, see if I can. This is KB Homes, which would be very good. So let me pull up that. KBH, is that right? Yeah, KBH. I like Kaufman and Broad. Okay, they're down a little bit today, but only 79 cents. Very strong chart. Let's look at the chart. Just want to kind of go over the chart. I'm going to switch over to the chart here. There we go. There's KB Homes. And so kind of want to go over the chart. Very nice composite rating on this one. 95 is the composite rating, and that is an excellent number. It's off a bit today. It's off 2%. I'm not too worried about that. There's tremendous demand for homes right now, especially the kind of homes that KB Homes builds. And for everybody that doesn't know this, KB Homes is a California-based home builder, very, very strong, but they're in all the best markets. They do have a little bit of an issue that they don't have enough land, so they don't have enough land to build a lot of their product, but they're basically selling them as they're coming out of the ground with the record low interest rate. So I do think this is a very good chart. I would, by the way, on the rule, never buy this on a downtick. It's on a downtick now, but I do think if this moves positive, again, maybe not today, then you want to buy it. It's got a 92 relative strength, which means that it's outperforming all but 8% of the market. So this is a very strong. This is a very strong issue here. Just want to look at it in terms of how it stacks up. It's in the industry group of 55. This is really good. There's 197 different groups. This is definitely in the top third. It makes my list for good things going on here. Now, one little bit issue here. It does report on 6/24. I guess that is today. So if you're not in the issue right now, here's the thing. I wouldn't hold this through earnings, and I think that's earnings are going to be tonight. So let me just check to see about earnings on this one. Yeah, earnings calendar, analyst estimates. Let's take a look at the estimate on KB Homes in terms of its earnings. Okay. Yeah. Okay. What I would do here, if you're in the stock right now, a good idea, because we're on a distribution day, I would sell this before the close today. I don't know if you have enough time. Sell this before the close today. Depending on how the earnings come out, it may go either way. So if you have stock, if you have KBH, take a look at possibly taking a little bit of profit off the table here. You might want to do that, and then if it shows a good number, then then you probably want to get back into the stock. But right now, because it's distribution, okay, I'm short trade KBH. Your honest thoughts, much appreciated. Okay, if you're short on it, you're going to have to wait through earnings. God, I don't know. I don't know if I would short this one because I think if you've got a profit in your trade, I would close the trade because this thing could pop higher. This could go higher. KB Homes could do quite well. So that's kind of my my thought on that. I hope that helps, Arnold. I really do. Okay. So let's see if I can read this. So should I have some cash on hand? Absolutely. By the way, just for full disclosure, I currently have approximately 30% of my holding is in cash right now, waiting for opportunities. So it's always a good idea to have your dry powder so that when opportunities present themselves, you can get into them. Now, at the end of last week, I went to all cash, and then in the last 2 days, I've been buying, but I still have 30% cash, and so that gives you an idea of kind of where I'm at in terms of in terms of the market. So that's kind of what I'm doing as well. So let's see. All right. So let's see if I can see it. Entered shorts this morning. Adjust a hedge by okay, that's not bad. It's I don't like shorting I don't like shorting. You may do very well because this is a distribution day, but I think that long term, I don't know if you want to do that because we're fighting against the tape currently. If you're short the market, the reason I say don't be short the market necessarily right now, even though it's going down, is because we have a situation where it may adjust back up. So be kind of careful on those shorts. It's not bad for it's not bad for a quick position, but we definitely still have an upward trend in the market. So I would hedging with shorts is fine. As an investment right now, I don't think that's a prudent thing to do. Again, as you can see, the market trend isn't a confirmed uptrend, even though we're down today. So that's that's kind of the long and the short of it on that. So I like to kind of show that. Okay, so let's see. Do we have a short squeeze? Well, I don't know, Nicole. Yeah, it looks like a squeeze. Okay. Yeah, this is interesting. Very, very good call, by the way, on this. If there's any stock that potentially right now that would get a short squeeze, it would be this one. Now, what do I mean by short squeeze? I think here I'm going to pull up the chart right now. We sort of had a blow off top in the last few days. So let me kind of pull up the chart here to give you a look at this at this chart, because I think it's very interesting. Whenever you have a stock that's as hot as Nikola is right now, you want to be very careful because a lot of people will be short in that stock. And even though eventually it may move down, if there's a short cover that's required, and that's essentially what's happened here, there was a short cover. That's why you see it spiked up. No stock, even the hottest stocks, will ever go up in that kind of a in that kind of a pattern if it's not a short squeeze. So that you gotta be kind of careful about that, because this is what they call a bear trap. What happens is the stock keeps going up. There's lots of good news, lots of hype on it. Everybody's excited. And then the shorts come out of the woodwork and they short the stock. And then it actually does better than the shorts thought. And then the shorts have to cover. And that's what causes the spike up here. So we possibly could see another short squeeze to 100. That's not what I'm seeing in this chart right now. I'm seeing it sort of settle. This may unwind in the future, but for right now, I don't think we have a short squeeze. I think this is a really tough one to. Yeah, there we go. Nicola looks like it's setting up for a squeeze at 100. I think so. I think that I think if it gets up to about 95 or so, I think you're right. I think you're right. I think we may see a short squeeze based on this high here. But remember, when I was basically selling into the short squeeze on Tesla, we had a similar situation. This is looking like the chart, a little bit like Tesla chart from about 3 months ago. So I don't know if I would go against it. I don't think Tesla is a good short candidate right now because of the potential bear trap that you might get on that. So, but I do think that we may have a short squeeze at 100. I think that's very smart thing to say. Okay, so hey, I got Regen July 10 calls, and it's down now. It's a good time to keep or sell off to save money. Good question. Let me look at the option chain for that, just on Regeneron. You know, the biotechs are tough to play because so much is based on, you know, kind of where the consensus is on, you know, where, you know, where they're, you know, where they're coming out with drugs and that kind of thing. And Regeneron is definitely in that, in that category. They, of course, everybody probably knows they have the, they have remdesivir, which is a potential candidate to be potential candidate for the COVID-19 thing. So let me look at the July 10 calls here. I'm just going to pull over that up on my chart. July 10. I just want to look at the action on this one, just so I can see it. Because I'm not in this issue currently myself, so I have to kind of look at it. July 10, and you're in the, oh, okay. It's trending. You know, July 10, there's not a lot left on this data decay here. Here's the thing: if you're down in this issue right now, you probably don't like to. You probably don't like to hear this. I would sell this right now only because I think that, you know, this is just too tight of a decay. We're looking at a July 10 expiration on this contract, meaning that, well, there's not a whole lot of time left. And even if you're right, because of the theta decay, you probably lose money. So what I would do is I would just cut my loss right now and get out, and then see if you can get back in at a longer expiration. This is the issue when you're buying calls. When you're buying calls, here's the thing. When you're selling calls, I like to sell calls with a month or less expiration. This way I typically get the benefit of this theta decay, that basically the coming closer to the expiration. When it is a situation where you're buying the call, which I don't typically do, I like to go a little bit longer than that, like 2 or 3 months for expiration. That gives me time to be right. You know, it basically gives me time to be right on the issue. Okay, so let's see. Take a call from somebody on TikTok. The Spider will up ever the market. The New York Fed is true. Okay, you know, that's true. I mean, the reason the Spider has been moving up so much is because all this liquidity has been injected into the market by the Federal Reserve, and basically they said that they're even willing to go in and buy the HGY, which is the ETF that covers the high yield, quote unquote, junk bonds, to support that. So there's almost a blank check right now with the at least in the bond market, you know, with the Fed willing to basically buy anything to create liquidity in the market. So yeah, I definitely think, and obviously the beneficiary of that has been the stock market, but it's not been equally shared. Most of the capital that's moved into the stock market, and the reason it's moving out of the bond market is because the yields in the bond market are so low. You've seen those in what they call the very reliable big cap techs, the Microsofts, the Apples, those kind of stocks, and that's where you've been seeing most of the gains. So, anyways, okay. So, what about American Airlines? You know, this is what I was trying to warn people about American Airlines before. American Airlines, you know, I love flying on American Airlines, but here's the problem that all the airlines have. Unless their traffic comes way back and very quick, they're going to be in a situation where they're having to cover huge amounts of payments to their lessors. They lease most of their aircraft. So as you can see, and I'm showing this up on the screen, this is a question from TikTok based on American Airlines. Basically, this stock is down 5%, which is only 75%, and the volume is up. This tells me that the people are taking their profits. This is the suckers. You know, they were able to pull in the suckers again, as they always do, on these kind of stocks, and now they're selling. And unfortunately, if you have some of this stock and you're down more than 7%, I would sell immediately, only because I don't think American Airlines is going to go out of business. but I do think it's probably headed lower. It's probably headed below 10. I'm guessing it's going to firm up about $8 a share, currently trading at $13.24. So I would not be a buyer of American Airlines, and if I'm down more than, and if I'm an owner, if I'm owning these shares, I would be out of them at a 7% loss, no exceptions. Just because I know it's hard, but I'm wrong a lot as well, and take your losses quickly. This I don't believe. Is this a buy the dip situation? Good question. I do not believe. This potentially is a buy the dip, but I don't know if this is really going to be the dip. You got to be careful on these. I don't like to buy the dip. I'll be honest. Here's my strategy. I typically like to buy stocks when they're at their all-time highs or moving to new highs on extreme strength. Why? Because that means there's capital flowing into that issue. When you have a dip, yes, you can buy, but if you have a longer-term horizon, I'm typically a momentum trader. I typically, if a stock goes down more than 7%, I'm out of it, and I wait until it is it's moving back up to the upside. Then I'll buy it on a new high as it's moving the right direction. When anybody tells you that you should income average down, that is a fool's paradise. You don't want to ever do that. You want to buy incrementally as a stock goes higher. If it goes lower, sell when you reach the 7% loss, because your chances of coming back to even are greatly increased if you employ that strategy. So I am not a buy on the dip kind of guy. Just my take on it. Okay, agreed. Okay, Kohl's. Oh goodness. Some of these stocks, like retail stocks, the thing about Kohl's, it's a great store to shop at. I wouldn't want to be an owner of them, just because the retail has changed so much so quickly, and their charts are just so bad that they're just really not buyable. Here, I'm going to show you for everybody out there on YouTube, Twitch, Periscope, and Facebook. I'm going to show you the chart for Kohl's. It is currently trading at $20.69. This is a live chart. It's a composite rating of 2. I just don't want to buy a composite rating of 2. Why? Because it's got the worst industry group. There's 197 categories, and right now this is ranked 197. So it's really not the place to be. You want to be in software. You want to be in those kind of issues. You want to be in those kind of issues. You don't want to be in the retailers, unfortunately, because as they say, they're the very worst group. You'd be better in the oils than this. So I just can't recommend Kohl's. I just hope that you're not in it, because I don't think you're going to be pleased with the results if you are. So my opinion about Kohl's. Can you check CLSN? Let me take a look at CLSN. Let me look at the chart of this one, see if I can do a little analyzation on that. So it's, for everybody out there, CLSN. And this is a question from TikTok, which I love, by the way. I wish I could show the charts on TikTok. I can't because of the way the feed works, but let me see if I can push back to over there. Okay, great. Here's the chart. There was a blow-off top here. This is a classic blow-off top. This is not a. These biotechs are really, really tough because most of them have one product, and it's a kind of a binary thing. If it goes good, it's great. If it's not so much. I would recommend CRISPR Therapeutics instead of the stock. I know that it's more expensive, but typically you don't really want to be fooling with stocks that are under $10 anyways, because they can be heavily manipulated. So CRSP, this is one I think you might want to look at as an alternative to this, to CLSN. I just don't think that it is going to give you the kind of results you're going to want, and I wouldn't be buying it. CRISPR Therapeutics is definitely, I think, where you want to be. So let me pull up the chart for CRISPR just so you that really quickly, and hopefully we'll get this chart here in a second. I'm still showing the old chart. Okay. All right, I'm having a little bit of bandwidth issues here, so I'm a little bit slow, but let me see if I can pull up CRISPR Therapeutics. Okay. CRSP is CRISPR. There we go. Okay. Take a second, and then hopefully we'll see it. I'll bring it up on the screen in a second. So that's the one I would recommend in the space. BioMarin is the top-rated stock. I've owned BioMarin before. I've done very well with it, but I'm currently not in that issue right now. So for some reason, I'm having issues pulling up the stock price. So there we go. All right, there's CRISPR. This is the one I think that you want to that you might be interested in. So I'm getting a little bit of a bandwidth issues here. So hopefully you're seeing this on TikTok. All right, CGen. CGen's actually a good one, but let me take a question from YouTube. Okay, so well, maybe I can take it. I can't take. There we go. There's CRISPR Therapeutics. This is the biotech that I think you want to look at. The reason I like this biotech, CRISPR Therapeutics, it's a Swiss company, by the way, is because it is being accumulated by all the big biotech funds like the IBB, that's the ETF that covers biotech. And they are accumulating this stock. It has it's gene editing technology, which I do think has a tremendous future. It's CRISPR Therapeutics. Even though it's down today, I wouldn't buy it today because I don't like to buy anything on a downtick. I want to wait for this to uptick, but if there's an uptick here, this is a very good chart pattern. You can see a cup developing. It doesn't have a handle yet. There probably will be a handle. This will probably trade sideways for about a week or so. And if it does, then it potentially is a very, very good buy. CRISPR Therapeutics in the biotech space. So let me see. Go back here. Okay, great. Good time to enter Amazon. It's always a good time to enter Amazon. The biggest problem with Amazon that I can see, I love Amazon in every way, shape, and form. The problem, though, I have with Amazon has nothing to do with Amazon. It has to do with Amazon's price. It's just for most people, I don't think you can buy enough of them. So here's what I would say about Amazon. Amazon is one of the largest components of the QQQ. So if you don't have, what it requires to buy Amazon, let's see, AMZN, I think it's a symbol. So let me bring that up just a second. Yeah, there we go. Okay. And I put it in there wrong. AMZN is the symbol on Amazon. Yeah. Amazon is a great company, and it's just getting better. The biggest problem with Amazon is the share price. Now, here's the thing: they haven't changed their share price in. It's because they haven't split the stock. That's the reason why Microsoft is selling for about $200 a share, and Amazon is $27.34 a share. They really need to split their stock, but a lot in this internet age with fractional shares, a lot of companies don't like to split their stocks anymore. It's always a good time to buy Amazon, but the problem with buying Amazon directly, to buy 100 shares would be a heck of a lot of money. It would be $273,000 to buy 100 shares of Amazon, which I don't think, at least I don't have that in my bank account in cash, though. Maybe hopefully one day I will. The better way to own it is probably through some of the funds like the QQQ. And so it's not nearly, the QQQ is, in the 200 range per share. So anyways, but yeah, I do like Amazon. I always like Amazon. If you can buy it, that's great. I think the best way to hold Amazon these days, because of the price, is through a ETF. An ETF like the QQQ, which covers the NASDAQ 100, of which Amazon is a very big component. All right, so MFI, and that was a trade I made yesterday, is down today. Are you still in the trade? Absolutely, I am. I believe in the stock. I have a little bit longer. My time frame on this option is basically until July 17th. So I sold I sold a 125 call on IMFI yesterday. I'm still in the trade, so I still in the trade, and I'm not I'm not down 7% on the stock, so I continue to be in the trade. And would I buy it today where it is? Well, no, because I don't buy on a downtick, but I'm not selling either. So hopefully it will come back, and the option, if the option is exercised, great. If not, this is one of the reasons why I always recommend selling that option to cushion any down movement in the stock if you don't quite get it on the right stock move. But I'm very high on the stock. Data center technology is exploding, especially with 5G. There's going to be tremendous demand in the 5G market for data center. They make data center they make data center chips, and I think that we're going to see good movement on that. So no, I'm not out of the stock, but hey, you get them good, and sometimes not so much. So I do think it's going to come back before July 17th. But if it's down 7%, I'll sell. I mean, it's very unemotional. If it's down 7%, I'm out. So your thoughts on LSCC? So let's take a look quickly at LSCC. I think I've got my internet connection back, and it seems to be perking along right now. For some reason, Lattice. Okay, I like Lattice. Yeah. This is good. This is a good chart, Lattice. Let me see if I can blow up the chart a little bit for you. I really like this. I do like this chart. 96 on the composite rating, which is excellent. Now, AMD is number one. Here's the thing, folks. I've never really made money on AMD. It's a great company, but I think that you're right to looking at these stocks. I know Lattice. I do think it's quality, and they're definitely they're in the right space. By the way, this is another thing that you might want to consider, is that right now we're in a upgrade cycle for the semiconductors. This is the semiconductor cycle. It's about an 18-month cycle. I don't know if you've heard of this thing called Moore's Law, but it basically coincides with that. So we're on an upgrade cycle in the semiconductor space. So that's why you're seeing a lot of interest in some of the companies like Applied Materials and KLA, which make the equipment. So I do like this chart. I think it's very viable. Wait until there's an uptick, but I think that Lattice. I think this is a good chart, and thanks for bringing that up. Okay, what about IBM? Well, IBM. I used to, I still love IBM, because I'm an old guy these days. It's hard to believe I am. I never thought of myself like that, but I am. And IBM used to be so dominant. I think IBM has in many ways lost its way. But there's still an awful lot of mainframes out there, and it's still very, very important for government markets. So it's not bad. I just don't like the chart. I wouldn't buy it. It's not like it used to be in the old days. Let me show you the chart here. And this is not a chart that you want to buy. I know that there's a lot of people that will say, like a Warren Buffett's of the world, that will say, well, I'd love to buy that thing, and 30 years ago, IBM was cutting edge. Unfortunately, the world's passing by to some extent. They do have really good revenue because they're in the government accounts big, but I don't like this chart. Don't buy it because it's below the 50-day moving average. It's just not something you want to buy. Here's the company you want to buy, and it's kind of, I'm Captain Obvious here, but you want to buy Microsoft because Microsoft is the new IBM, and it has a much better chart. Let me show you the part of IBM versus this is the chart for Microsoft. Look at how it's trending from the lower left-hand side to the upper right-hand side. This is a much, much better chart. It's a 99 composite rating. Let me show you IBM again, and this is why you don't want to buy IBM. I know that IBM is cheap, but here's the thing about stocks. You really don't want to buy them on sale because usually they're on sale for a reason. And usually that's the reason is they're going lower. And I think that IBM, it did pop a little bit after hours, but I just don't like this chart. I don't think you want to be in it. Take your money, invest in Microsoft and not IBM. Just my call on that. So that's going to give you probably a better opportunity, at least ongoing. So let's see. Why can't you just buy Amazon in fraction? You can, absolutely. Fractional shares are really revolutionary, by the way, and a lot of companies are doing that. Now, here's the problem with fractional shares. There are only a few companies are doing it. Robinhood's doing it. Schwab is doing it. I think TD Ameritrade will do it. They're not doing it currently. The biggest problem with fractional shares that I see is liquidity. Okay, because remember, you're buying fractional shares, but what if you want to sell them? Well, do all the people have to sell to make up one share? So there's a lot of issues that I am not totally comfortable with. What I think that Amazon should do is what is traditionally done is they should split their stock 10 for 1, and then the price would be decent so that people could buy 1 and 2 shares. I think fractional shares are, potentially a problem going forward, especially with liquidity. So, but you can definitely buy them, and Amazon is a total quality company. If you want to buy Amazon directly, a fractional share might be the way to go with the dollar cost on that. So I think they are going higher, but it just adds another level of complexity to the market. I would rather see Amazon split their stock. I know why they don't want to do it, but I would rather see them do that. So, anyways, okay. So, what do you think about IBM? Okay, do you think INO will surpass $25? Here's the problem with INO. I don't have a lot of my trust factor for the Chinese issues is low, and it's just based on. Oh no, I'm sorry. INO. I'm giving you the wrong one. Pardon me. I was looking at that, and for something I was thinking NEO. That's wrong. INO. This is a tough one too. This is a pharmaceutical company. It looks like it's had a blow off top. Let me show you the chart here, and see if I can think if it'll go beyond the 25 mark. So let me see if I can switch over to that. There we go. All right, here we go. Here's the chart on that. Yeah, it's already had a blow off up tonight. This might go. This actually develops medical and systems and therapeutics for cancer and infectious diseases. All right, well, that's good. It's got a good, strong rating. Again, it's in this biotech group, BioMarin being the number one, BMRN. I just think that, I think you want to go with something that has a potential higher likelihood. This is 60th in the group. I don't know. I can't recommend this one. I think the better way to do this is to buy the IBB, which is the ETF that has all of them. So let me show you the IBB. Yeah, there it is. This is the biotech IBB. The IBB is the biotech ETF, and I want to show you, kind of showcase this particular ETF to you. This is really a safer way to buy the biotechs. The problem with the biotechs are there's a lot of them. They typically are very binary. They don't typically have more than a few products, and unless they're bigger, they just don't have the revenue. So it's either they win or they lose. So a way to kind of mitigate that is to buy the ETF that buys the relative weights of the biotechs, and I think this is a great way to go. Look at this chart. This is the IBB. This contains many of the stocks that you're talking about, and I think it's really a better way to play the market on the biotechs. I am not against biotechs at all. I think that's the future. I think there's a lot of money going into them, but I think that you've got to be careful because the companies tend to be very relatively small, and they tend, so you don't want to put all your cash on just one pony. Why not buy every pony in the race? And that's what I would do with that. So I would look to the IBB to play the biotech, which is very strong. And I think, as you can see by this chart, this is the daily chart, but I want to show you the weekly chart on the IBB too. It's moving up nicely, even though we're in a downtrending day. So that's how I would play it in terms of the biotechs. All right, so let's go to the next question. SHLL, and this is from question from TikTok. So let me go and see SHLL. SHLL. See if I can. After hours. Okay, Turkers. Okay, this is a shell company. This is basically what they call a blind pool in the industry. And what this is that they're looking to possibly make a significant investment in a company that's emerging. This is what happened with Nikola. There was an acquisition blind pool that basically merged with it, and that's how Nikola went went public. So I don't like these typically because I don't know what they're investing in, and that it can be a problem when they're blind pooled. So I mean, even though this does say that this number one in the group, that doesn't give me a lot to go on. It's 16.41 a share. It's down $1 today. After hours, it's still down. It just depends on what deals these guys have in the hopper. If the deals are good, they can make money. If not, not so much. So I don't think that this is really an investment right now. This is the same thing with IPOs. I typically, I used to buy IPOs. I actually was a buyer of 100 shares of Google when it first came out. But I sold it when it went up. But the problem with that, of course, is that with these blind pools, it's very hard to know what kind of deal that they have until they have a little bit of track record. I don't really think they're viable. So I want to see what they're investing in and what company they'll eventually merge with. But this is a blind pool, so I don't think, even though the stock, even though you might think, wow, this is a great lottery ticket, I don't think I would be in this one until I knew what they were going to invest in, because it's like I can give you $100 and you could go waste it on something, or you could buy the greatest stock in the world. I don't know until there's a little bit of until there's a little bit of history. I don't want to see it. Okay, somebody that wants to is talking to me about shorting Exxon. I don't want to be short in this environment because we're still in a confirmed uptrend, and XOM is the symbol on ExxonMobil. Exxon is still a great company, but it's suffering from and let's pull the chart up here, and this is for everybody on TikTok. By the way, I'm simulcasting on Periscope at pscp.tv/Dallas Trading Floor. You can actually see this as it is running. I do not think this is a short candidate, but because it has a head. The shorting, if you are going to short a stock, you want to see a pattern called the head and shoulders, and this is starting to look like it might. Yeah. You want to see a head, that's the head. This shoulder here, though, should be significantly lower than this one. So I don't know if this is a great shorting candidate. I think that you're basically going to want to short something like Occidental, OXY, in this oil group, because I think they're a lot weaker. Now let's look at Occidental to look at their chart. Okay, I think you're going to see much of her. Yeah, okay, well, no, this has also got the head and shoulders. So yeah, you're going to. In a long story short, I think you want to put this on a shorting watch list, ExxonMobil, but you don't want to short it now because it doesn't have a confirmed head and shoulders pattern. And hopefully I'll cover this in a video that I'm going to put up on YouTube. What a head and shoulders pattern is. The head and shoulders pattern is sort of the pattern that you want to see to confirm that it is a shortable stock. What's your opinion on Wirecard? I don't know. I don't know about Wirecard. Let me just look at that. That's a good question. By the way, if you're into the fintechs, which I am, the Wirecard is WCAGY is the symbol on that. Let me pull it up and put it on to the screen here. There we go. All right, this is Wirecard. I don't like this. Look at this chart. This is horrible. This is a fiasco. You don't want. I hope you weren't in this one, and if you were, I hope you had a stop loss, because this is down 3.45% today at $6.61. Yeah, this fell off a cliff, and I don't think it's coming back. Germany-based company that provides internet payment and processing service. You know what? Why buy a company like this? Why not buy PayPal? This is the one that I've been touting. I know that it's, everybody knows about PayPal, but this is the one I'm in, and I think it's just superior in all ways. PayPal is going to win, and they're going to win in Germany, and they're going to win in the United States, and they're going to win in India. They're going to win everywhere that Wirecard isn't. So look at this composite rating, 97 on PayPal. It's down $5 today. You say, why would you buy that? Well, I wouldn't buy it today because it's on a downtick. I'd wait for an uptick, but I still think long-term this chart is just stellar. Look at that. It didn't even dip, really, when When we had it dipped a little bit when we had the downturn and then it turned right around on March 23rd and then moved higher. So if you're going to want to be in the fintech space and you want a stock that's going to, 6 months from now, you're going to be saying, wow, I'm glad I invested in that thing. PayPal is where you want to be. I think it's going up. Now, Square is rated #1 in the category. I also like Square. I happen to like PayPal better because they have a larger user base. And I do think that, why invest in Visa and MasterCard, which everybody has on their list? Why not invest in PayPal or Square? That's the future. The market is looking towards the future. That's really what you see in the stock market. It looks 6 to 18 months in the future is the stock market. So that's where you want to go. You kind of want to figure out, kind of like Bobby Orr in the old hockey days. Everybody asked him, well, why are you such a great hockey player? He said he went where the puck was going, and that's exactly what you want to do with the market. The market is moving to cashless, and in fintech, the market is moving away from even Visa and MasterCard with their plastic cards to internet-based apps and payment solutions, and those are dominated by PayPal, and they've been around forever. I've had a PayPal account now going on 20 years, and it just gets better and better. If you can't have a bank account and you're a small merchant and you don't have enough flow to get a merchant account, you can get a PayPal account. Anybody can get a PayPal account, and they can open a micro business. So PayPal's a winner. And I also think Square is excellent too. Square is basically in the micro payments industry as well. By the way, all in this PPP thing with the coronavirus, it was Square and PayPal that basically came through for the small retailers. It wasn't Bank of America. It wasn't JP Morgan. It wasn't any of those. It was PayPal and Square. This is where you want to be. I have very high conviction on PayPal. I think it's just going to get better, and that's my take on it. So let's see. Next question. Oh, their CEO was arrested yesterday. Okay. Oh man. Well, the problem with the fintech space is because you're dealing with money, there can be issues. This is another reason why this is another reason why folks really be careful at buying stocks that are below $10 a share, because this typically there's a reason for that. Now, there are some good companies that are big companies that are below $10 a share. I can think of one right now that I really like. It's Siri, SIRI, that's below $10. But most of the time, if a stock is trading like that, why not buy and hold the quality companies that are going to go up? You don't need to be in the Wirecard if you're into PayPal or you're in Square. That's just the way it is. I'm sorry to hear that the CEO was arrested, though. That sucks. Okay, so they lost $2 billion in fraud. Yeah, see, that's the thing. And that's the problem with the fintech area. It's a highly regulated area, but even with that, you still have to be careful. Typically, a lot of these newer companies don't have the reserves, and if there's a problem, it can turn into a really big problem. So that kind of sucks there. All right, so I'm trending in Reddit. That's great. Okay, well, I have wasted almost an hour of your time, and what I'd like to do is tell you about my trade alerts, because I have free trade alerts, and you can basically follow along just like I'm trading. Now, if you're on TikTok and you want to get on my list, it's real easy. Just go to my profile at JK Malone, and then there's a link. Just tap on the link and then put in your information. You'll be on the trade alerts. It's totally free. And this is some trades that I'm doing. And, basically, I'm pulling no punches. This is exactly how I'm trading. I don't get rid of my losers and emphasize my winners. I show you pretty much everything that I'm trading in there. So, and I typically try to do these trade alerts usually when I'm making the trade. Sometimes the trade alert comes out early, and then when I actually get into the trade, it's moved too quickly. But this is sort of the way I'm thinking. My trade alerts recently have been in Netflix. They have been in Imphy, the company that I was talking about today with Arnold, and also I've trades on Microsoft, Tesla, kind of the usual suspects there. But that's the kind of the thing I do. So just want to put this up on the screen. It's a free list at www.dallastradingfloor.com. So you can go there, just fill out the little thing and send it in. And you'll be on the list and getting the subscribe to the trading to the free text alerts. And some people charge for this. I don't. Again, I'm building up my user base here, so do go on to there and sign up. And again, thanks for everyone dropping by. I'll be on tomorrow at 2:30, and hopefully we will see some of the market stabilize a little bit, but either way, there's always ways to make money in the market. If it's going up, if it's going down, it's going sideways, there's always a way to make money in the market every day, and that's true, and it's been true for many, many years, and that's what I am trying to present here on Dallas Trading Floor. So bye to everybody on TikTok. I'll be back at 2:30 tomorrow, and I'll see you then. And for everybody on Facebook Live, YouTube, Periscope, and Twitch. Oh, wait a minute. I have one more question. Thank you, Ben. Hi, Arnold. Appreciate it. Hopefully you're making money out there in Southern California. There's going to be I think the real estate market, you're going to see the biggest problem I guess you guys have is you don't have enough houses, but you got a lot of buyers, which is excellent. So I will see you tomorrow, and till then, happy trading, and